All right, folks, welcome back. Hope you had a pleasant weekend and a pleasant week. So we're looking at the dollar index. This is our daily chart, and kind of want to be casual with this. I'm trying to warm back up to the marketplace. The only thing I did this week was really low time frame scalping and trying to get a better read on it. On the higher time frame here, we had a nice reaction off of our volume imbalance turn fair value gap. We traded down into these two volume imbalances and traded completely into this range here. So we had more, in my opinion, than required for a retracement to go higher. Now, that's not to say that it can't start off next week moving higher, but right now it looks as if it wants to attack that sell side liquidity right under here. We do have a buy side imbalance, sell side inefficiency here, and this breaker from this low to high to low might become a catalyst again for a draw into liquidity. If we lose the breaker, in other words, this candle's low to candle high, if we lose this low, if we go below this and below that particular candle's low right there at 91.08, well, let's call it 91.08. If we go below that, then we'll be looking for this and maybe even new lows. But that has to trade there first before I make that, well, decision to think that's going to happen. Right now I'm forecasting and things can change over the weekend. That starts this whole thing in a different direction on the open on Sunday. So what am I saying here in the shortest way about it? I think we're going to remain heavy or bearish. In other words, it's not going to have a lot of ease going on the upside. I think it'll be easier for it to go lower to run the sell side liquidity resting below here. Fill in this imbalance in here, and then we'll see what we get in regards to that candle here. If I'm correct, as I'll show you some things in some of the commodity markets today, this should send dollar lower and commodity prices higher. But we'll see. If we drop down into the hourly chart for dollar, all right, so I'm going to be doing my annotations naked. Okay, so you can hear my commentary and you can add all the things into your own chart. Okay, so that's going to be your homework as we go forward. So the market has traded lower. We did have a small little area in here I thought we could have stretched up into. We did clear up this little imbalance, but I would have liked to see it spike up through here and then reject that. Then I'd be extremely bearish on dollar. Right now, I'm modestly bearish until we see what we get on Sunday's opening. We do have a very clear low resistance liquidity run signature here for relative equal lows, with this second low or nearest low higher than the old low here. So that's our low resistance liquidity run signature. So it looks like we could trade through that going into next week, and I'm favoring that from Jump Street. In other words, right from Sunday, I'm going to be looking for evidences of that. Higher prices in foreign currency, lower prices in dollar. Now obviously things can change, that way you know that I'm committing to one side right now. But if things change, obviously, you have to be flexible, because anything can happen in this world right now that could set this whole thing in a different direction. Let's go over to euro dollar. All right, here's the euro dollar daily chart, and you'll notice I'm not going down into the 15-minute time frames because you've been supplied that on Friday with the daily log entries. So any of the annotations there are salient. They're not required here in this discussion, just to keep things short. And for the sake of brevity, I'm going to keep the most salient levels in focus. That way we're all on the same page here. Originally, I said that we would trade below here, and we'll see if it gains any momentum to go and run these relative equal lows. Structurally speaking, I guess it could still do that, but I'm favoring the bearish dollar, so that would indicate that we're most likely going to run the buy side liquidity here and clean up some of that. Now, it can run up there and then reject and go down here. That could be one scenario. If I was making the market for euro, that's what I would do. I would take it up here and then run down here, clean that out, and totally blow out both sides of the marketplace, and then wait to see what happens. But I don't think that's going to happen, and I'll give you some reasons why, again, when we talk about some of the commodity markets. Friday's trading, you can see we've traded down into the order block, and so far has rejected that. So to me, it looks a little bullish, and we'll see if it wants to spread its wings into Sunday and Monday, getting up into this level here. If we have to come back down into this buy side imbalance, sell side inefficiency, I'm not as bullish on euro. In other words, if we break down from here, I'm not looking for it to come down here to get another discount level to go higher. Then I'm thinking it's going to go lower to go lower. All right. So let's drop into the hourly chart. So you can see we have a really nice bullish market structure here, filling in the fair value gap here, rallying, coming back down in, order block. We covered all this area in here. Optimal trade entry, we mentioned that as well. Rallies up, runs initial higher high here, digs back into the sell side liquidity. This area here has, again, to me, it would have been better had it traded down through that today. Then that would mean this is really bullish. So again, kind of like think of the mirror image of what I was expecting on the dollar index. You know, right now, at the time of this recording, it's Friday and the markets are technically still trading. I would have rather seen it drop down, clean this up here, spike through it and come back up. And then I would just be very blunt and say, I'm bullish euro. There's no doubt about it. I'm buying euro and I'm looking for a weaker dollar. Whereas right now, I'm favoring that going into Sunday and Monday's trading. So that way we know there's the context in mind. Again, low resistance liquidity run signature here, lower high than the higher high here, and it's most likely going to run higher. That's what I'm siding with. That's what I'm going to co-sign going into the weekend. Let's drop into cable. All right, here is the British pound daily chart, and let's zoom in here just a little bit. And as you can see, we've been somewhat in a bearish to consolidated market. The tone has been weaker here. Again, much in the same vein as what I mentioned on euro and dollar, I would have much rather seen this low spike a little bit more lower and go below this low here. It didn't get that. So we're creating relative equal lows. I don't really like that so much. Doesn't matter. It can go higher from that, or it can kind of like stagnate and then go lower on Sunday or Monday's trading and then chase euro. If euro does go higher and dollar goes lower, the cable market might be the sixth sister, if you will, on the upside, and euro might be leading the way initially. I'm not as dialed in on the long side of cable, whereas I've been bearish on it this week and working with intraday trades like that. We do have this area right up here. So with the sell side imbalance, buy side inefficiency, fair value gap from this low and this high, you want to have that marked out on your chart because that might be a target for Sunday and Monday going into Tuesday's trading. All right, here is the British pound hourly chart. Really, it's tough. Okay, it's not an easy market to be trading in because it's back and forth, and just so you know, not to spread anybody's personal business, and it's just to make sure you all understand what I said before. Even when you first started in the mentorship, I said don't try to trade with live funds because you're going to be doing things, testing things, and you don't know what you're doing yet, and you're probably going to hurt yourself financially and blow your account out. I got another student today from the first group, and they've blown out their account trading with live funds. I also read an email from another member here, and off the top of my head, I did not do a search on what group they're in or what level they're at, but they reported that they just can't help themselves. They have to keep trading. And that's a discipline problem. And that's going to be a problem that leads to ruin. I have not had one student that came through, traded with live funds while learning the mentorship, and did not blow out an account. Now, hearing that, it sounds like, well, Michael, what you teach sucks and it doesn't work, when you obviously can see that it does. But the problem is, and this is why I get bent out of shape when I see other people trying to teach my stuff, you don't know, and they don't know, everything that's required for you to even consider taking live funds. Just sit on your hands and wait. You have to figure out what it is that you're looking for, be consistent with finding it, and then be indifferent to the result. That means you don't care ultimately if it's profitable or isn't on each individual transaction. And when I see folks that say, hey, look, I'm giving up trading now, I've blown it, I can't come back from this. Well, I've been there. I've done that multiple times early on in my 20s. And you'll know if this is for you or not, because if you can't leave it alone, regardless of having blown out the account, you'll come back. You'll go back to studying. You'll do whatever it is that you got to do to get through it. If you just can't do that and you can't stomach it, then you're making the right decision, and you probably really should retire it and never look at it again, because it will harm you. It'll warp your perspective on everything, and you'll become very toxic. So if it isn't for you, forgive yourself and move on and try to pursue other things. But in my experience, I've never seen anybody say I quit and leave it alone. I've never personally ever met anyone, not that I've met anyone of the members in my mentorship, but I've never met anyone that has been a trader and tasted just one winning trade is enough to get that bug bite, and you never ever get away from it. It's like you're infected. So, but I'm sure there's people out there clearly that can't do this and know enough about themselves to say, I'm never going to come back from this, so therefore I have to leave it alone and tap out. And there's no shame in that, because if you know yourself that well, then obviously do what's best for you and don't lose your mind over it. But for everyone else that's plowing through and doing it the right way, not trading with live funds, this cable market has been rather difficult this week. Now, it may not seem like that if you were watching me in my Telegram channel that I was running this week. You've probably seen some run-ups on a paper trading account, which, again, all I'm trying to do is get in sync and get back in the swing of things, because I honestly don't feel that connected yet. I was hoping I'd get a better feel, but cable's feeling a little weird to me, and dollar just hasn't really done enough to animate the markets. And to me, I feel like there's something in the offing that is probably going to be an event, okay, like a swan event, black swan event. And the markets will use that to gyrate and get all excited again, because right now it's quiet. And everything really is pouring into equities, like indices and stuff. And we'll talk about that a little bit as well when we get out of the cable market. But I think that the British pound, if we're going to be trading, you need to wait for pound to really turn. Right now, it's sideways to lower. So it's kind of like the weaker sister between it and euro. So if you look at that in contrast, and for those that have been asking in email, when I talked about the compare tab on TradingView, this is it. And we're going to compare that with the euro. And you can see there's a strong divergence between the relationship of price in cable and that of the euro dollar. Euro dollar is obviously the orange one, and they've been diametrically opposed. So when you see that, this sets the stage for euro pound to go higher. So let's take a look at euro pound. All right, here's the euro pound. This is the daily chart, and you can see, as I mentioned in the PDFs, and I've also mentioned in, I think, the Monday's review where I actually did a video, the euro pound was getting all the action because we're in a decoupled market. Decoupling is where I just shown you that cable's going lower, pound dollar's going lower, euro dollar or fiber is going higher, and that is a recipe for this pair to move on the upside. And if they move in opposite directions, it creates these really nice, powerful runs where the normal delivery is euro is allowed to rally and cable is sideways, or euro is sideways and cable goes lower. That makes the euro pound go higher as well. But if they move in diametrically opposed directions, one going higher than the other, and euro is going up, that will make this pair go up a lot. It's just one-sided. So that's what you're seeing here. Now, looking at it from here, even if we drop out to a weekly chart, we traded down into all of this buy side and balance, sell side and efficiency. And this right here is the order block it trades into. Now we have very clear, obvious relative equal lows, and that's very similar to what we looked at on the daily chart of euro dollar. So there are significant pools of liquidity on the downside for euro and euro pound. So all of this here might be just a run up for a future failure swing to go lower and then eventually tag this. I don't know where that is right now. I don't see anything that's obvious to me, so I have to wait a little bit for more information. But everything has been delivered this week relative to the idea I shared on euro pound being the recipient of all of the volatility in forex between euro and cable. So while there has been very small short-term intraday trades in both pound and euro, this here has been the kind of like the one shot one kill, but it's a pair that I use just for a selection tool. It is not a pair that I trade, even though everyone likes to tout it as it's the most profitable one because of the number of the value per pip, because of its delivery on that regard. I don't care about that. It's a pair to me that helps me figure out what pair I need to be in between euro or cable. All right, so let's move over into the teaching portion a little bit with this indice market here. We're going to look at E-mini S&P, and this is the June delivery contract. All right, and you can see that we have obviously moved up from our discussions on where their buy points were, and we went into great detail about all of those in here. I want to take you into the marketplace right here and show you again, keeping in stride with what we have been using for teaching in indices. If you are encountering a marketplace like this in forex, where you have to be nimble, okay? And what I mean by that is you have to know exactly what you're doing, know exactly what you're getting in at and where you're getting out at, and sticking to that, not trying to turn them into one shot one kill, long-term, intermediate term trades. Get in, get your 10, 15, 20 pips, and out the door you go. That's the kind of market we're in. And there has been more of my intraday scalps come back on me deeper than I would have rather expected them to. And that to me reveals that there's a great deal of indecisiveness. That means the markets are being held way more in consolidation and therefore in manipulation than that of a normal symmetrical market. So if you ever have that environment like that in forex, you have one of two things you can do. One, you can sit on the sidelines if you're not going to be an intraday scalper, taking your little surgical strikes and leaving, doing one trade per day, not trying to go crazy back and forth. I'm not saying that can't be done. I'm just saying as a student, it's unreasonable for you to anticipate your level of skill being able to thrive in this environment. But the other thing is you could stay out of Forex and transition into indices. Now, some Forex brokers allow you to trade the Dow, it's like an indice that you can trade through, and for the life of me, I can't think of it. I was a broker I know of that we had passed through in using, but they do offer it, obviously, because there's people that are trading it. And if you can find a broker that allows you to trade the Dow or the equivalent, you can trade using what I'm teaching you here and what I have been teaching and what I actually teach you later on in the mentorship when we talk about indices and stock trading and commodity trading and bonds. But we're going to zero in here and look at one more example of how the market comes back down into an order block from low to high. We're below equilibrium, so we're in a discount market trading at a PD array inside of a bullish market. There's buy side liquidity above here, so we can anticipate the market running up. So let's look at how the market dropped right in from this low to here. So when this drop took place, what kind of insight can we glean from that? Was this a stop run, therefore accumulation for longs, or was this a break lower in market structure that would lead to a lower price run below here? Obviously, we have the benefit of hindsight, but we're in a predominantly bullish market. So we have to anticipate the likelihood of this low being taken for the purpose of accumulating the sell stops to run above here like we see. So how can we get an x-ray view in that? Well, we go back to the compare tab, add in the Dow, and add in the NASDAQ, both being the M month or June. And we'll change our E-mini S&P chart to a line chart. And right away you should be able to see the blue is E-mini S&P. The light blue is NASDAQ. You can see that over here with these little colors. And the orange is the Dow. So as we drop down in on the S&P, we did match that with a lower low in the NASDAQ. Let me take the S&P off for a moment. Here's the NASDAQ making a lower low. Comparably, what is the Dow doing? It's saying, nah, that's not real. It's going higher. So it's shaking off this run here. So what's occurring in NASDAQ is it's taking its sell side liquidity here, whereas in the Dow, it's just trading back into an area of mitigation here. So you're comparing and contrasting both. Now, if you look at the Dow versus the E-mini S&P, let's add the E-mini S&P back and then take the NASDAQ off because we've already got the information we needed from that. So here is your SMT divergence. Lower, higher. And if we look at that on the candlestick again, looks just like an indicator would be, showing you a divergence, right? But it's just price. You're seeing the crack and correlation between all these major stock indices, the Dow Industrial, the NASDAQ 100, and the S&P 500. And you're being able to get an x-ray view behind the scenes, if you will, what's actually occurring. And right in here, this is accumulation of the sell stops at a bullish order block inside of a bullish market. And you have this x-ray view of real accumulation giving you a confirmation. It's a confirmation tool. It's not a timing tool. Okay? You don't look at this and say, oh yeah, it's diverged, so therefore I'm going to be a buyer. You have to have some kind of context in here to lead to this being a buy, and this gives you the confirmation that says, yeah, you're probably going to be right on that trade. Doesn't mean that this can't change and go lower at a later time. It just gives me, as a trader, the trust factor that this is a really good accumulation of those sell stops. So I could be a buyer just like smart money will be, buying those sell stops at a deep discount and then riding a run up into something like that. All right, so that's the business there. So again, it's just one more example of what I've been showing you with the indices. And this is actually a really powerful run If you look at it on a 15-minute time frame, we have the run down into the order block, the run up. What is this right here? Fair value gap with the down close. Extend it out in time. Perfect delivery of the order block with fair value gap. Run. It's just very, very, very easy to do. The order block also, look at the opening price on that candle. 4081.00. What's the low on that? 4081.00. Perfect. It's not a quarter point early or a quarter point over. It's exactly to the pip. Or in this case, to the point. So again, if you've ever questioned whether or not if Forex is going to be the market for you, you may end up transitioning into trading indices. I've had a lot of students do that. There's nothing wrong with it. It doesn't make you a trader. It doesn't make, and when I say trader, I'm not trader to me as an educator, because I'm teaching you how to read price. The whole concepts as a whole allow you to go into any asset class and go in and find price moves. Therefore, if you know how to manage money and you can manage yourself and master yourself, you have the strongest odds in your favor that you can be successful. Notice I'm saying you can be. I'm not saying and promising that you will be successful, because you all have your internal demons that you're wrestling with, and you know what they are. If you don't, you're going to discover them as soon as you start trading with live funds. Okay, that's a guarantee. It always happens. You learn more about yourself, and the quickest resolution to that is go right back to demo. Minimum 3 months. You have to clear your head, get all that stuff out of the way, and figure out what is your problem. And all of us had problems, when we first started, and some of you are going to wrestle with letting them go, but it's needed. All right, let's go and take a look at some of the commodity markets. All right, and why am I talking about bearish dollar? Why do I feel a little bit strongly about that? Well, if we look at corn, all right, corn has been in a consolidation in here. We could be leaving this. Now, I'm not saying that it can't be up here with a false breakout and go lower. It certainly can do that. I'm siding with the long term, and I'll pull it up on a weekly chart. You'll appreciate that more. Now, while it looks like this, it could be topping. And if you run all kinds of indicators on here, it might be flashing bearish divergences. I'm not going to do that because it's blasphemy in here. I don't use it. But if you look at the higher high here, this might just be an early stage of a run out of that, because all of this here is based on food shortage, because it's going to be real. It's going to be real. I've preached this to you last year, and not to sound like a Bible thumper, but I'm telling you, we are in for some real rough times, and everything's going to get ridiculously overpriced. I was looking at some real estate in a couple other states, and some of the prices are just ridiculous. And if you put an offer in, it's like you have 50 other people that are going over top of the asking price, as much as $25,000 to $40,000 more. And we are in some really perilous times. I mean, if you're not paying attention to this part of the discussions, and you like to dismiss it all, it's going to be a shock to you later on. And when I say later on, I'm not talking about years and years down the road. I'm talking about in months. Like in months from now, before we close 2021, there's going to be a sudden realization that you aren't as prepared as you would have liked to have been. So this is why I tell you, and I'm reminding you again, accumulate some non-perishable food, some water filters to filter water and bottled water, okay? Over-the-counter medicines and things like that. You want to get these things while you can, because whether you like the current administration in the United States, or whether you're a person in the United States or not, food is going to be a weapon everywhere. That's what's coming. And governments know this. I said this last year, and look what we've seen a parabolic run. I don't think this is it. I think we're going to see ridiculously higher prices than that. And I don't think that this is just a run higher to make a top. Now, can it go lower and retrace and scare a lot of people out? If it did, I'd look at that as a buying opportunity at a later time. I would look at that as a buying opportunity. But I think this is just going to keep going higher, and people are trying to short this. This is a commercial bull market. This is commercially driven. This is large countries accumulating food. If you look at soybeans, see what's going on? So we were talking about this back here, and now look where we're at. There were some monster moves. Well, if this is going on in the grain market, what do you think's going on in meat? You like to eat steak? Look at this. That's meat prices. So if this trend is continuing, that's heavy on the dollar. All these food costs going up, that's going to translate into a weaker dollar. Your buying power is going to be diminished as a United States citizen. So if you're paying attention to things like this, like I'm trying to teach you to, it creates a helpful bias. Doesn't mean it's cast iron. It's not going to change or deviate from that when prices being offered in these particular markets. It just means that it's likely to continue. And like I teach, I don't try to teach you how to pick tops in primary bull markets. I will teach you how to find lows and bottoms in bullish markets, but I'm not trying to teach you tops in bullish markets or bottoms in bearish markets, because you're going to get hurt doing that. I have tried for 20 plus years to try to finesse those types of things, and while I can be profitable near the highs selling short, lots of times it continues and goes higher. And if I hold on to that like I did when I was a 20-year-old, you get blown out and you wrestle with it and you get mad and you say, no, this is really good. How do you know what these markets are going to do? We are in unprecedented times. Everything seems like it's getting back to normal. It's not. It's not. Okay? Things are going to rapidly start changing and become even more restrictions. If anybody in Canada is part of the mentorship, you can confirm this. Also, if you're a charter member, and talk about it in the forum. But I was listening to a report talking about Trudeau saying that, hey, look, if you're going to be flying out of the country or whatever, you have to take a test, a COVID test. And if you come up positive, then you got to go to one of their government facilities and you don't have an option. And they're talking about 3 years in prison if you say you're not going to do it, and $1 million fine or whatever. Listen, folks, that's writing on the wall. That's things that you need to be aware of. That's what governments are doing, and they're trying to do these COVID passports. All of this is conditioning. You're not going to get COVID and die. Okay, that's not going to happen. That's not my concern. It has not been my concern this entire time. My concern is your ability and my ability and my family's ability to get the things that we do and use on a day-by-day basis. That is going to be severely controlled. And your freedoms moving about is going to be restricted severely. So it is important that you continuously learn how to make money in these markets, because there are going to be opportunities. There are possibly going to be explosive opportunities. not just in commodities, but in everything. Because all it takes is one particular event, and I don't know exactly what that event is. I'm not claiming to know. I'm just saying, looking at these charts, it's indicating that we are in trouble. Like looking at the housing market, everything's becoming ridiculous. You can't afford it unless you have a lot of money and you're willing to pay way over top of list price. You're probably not going to get that house. And to build new, lumber prices are astronomically high. Now, take a step back for a moment and think about what's going on here. To me personally, I think we're about to see a housing market crash. I think that we're going to see more trouble with people getting evicted because folks that own the homes and rent them out. Right now, real estate owners that rent out are saying, hey, look, I can sell this house and just get cash. And I ain't got to deal with rent. And I ain't got to deal with none of this stuff, because what happens if COVID happens again and they don't give me any aid? I'm out. So they scared real estate investors into holding real estate, creating a buying frenzy in real estate seekers, and real estate holders are doing what? They're selling. So what's actually occurring here? You're creating a bubble, and you're also getting people that are able to make money through real estate out of real estate. Look up Agenda 2030, do some research on that, and you'll see what the global elitists are trying to drive everything towards. You're not going to own any property. You're not going to have anything really of yours, and private property will be illegal. And you'll own nothing and you'll be happy. And the whole premise is build back better. And that's what Biden's administration was preaching as they were campaigning, build back better. It sounds a lot like 1984, the book, which is why I submitted in many instances that y'all should read that too. Because what we're seeing is the elitists really trying to secure ownership of the world. And every country is going to be affected. Every single one of them. There are some countries right now that are doing better than others in this respect. And my opinion, Vietnam is one of them. So that eventually will change. They'll be doing things everywhere. But these opportunities that are coming, they're not going to be one that you get in and get out type move. They're going to be a move that you get in and you just let it go. And while I'm not typically a position trader where I get in and hold for months, in this environment, I'm waiting to see exactly what it is I'm wanting to see in the charts that I have not taught you yet. And once I see it, then you're going to hear me say, this is what I'm doing. When I say that, I'm not saying hold my hand and let's walk this primrose lane together, okay? Because if I'm wrong, I'm going to lose money. But I'm telling you when I'm going to be doing it. So therefore, you can, quote unquote, study it at the same time, okay? While we are waiting for that, you should be doing whatever you can to accumulate whatever it is that you typically eat, and do that for your home and your family. I could go on and on and on, and I know this isn't what a lot of you want because you just want to talk about charts and making money. But if I don't tell you these things when I'm feeling inclined to do so, it'll eat at me. And I have to tell you when I feel like I got to tell you. So I just told you, so now you have it. But the idea of these markets indicating that we are obviously, in a market that this could keep on going. Nothing in here says it has to reverse, because the underlying narrative is big countries are buying food. So why should this stop going up? If there's a huge buying entity like China and other countries going to join the bandwagon too, once they realize, hey, look, maybe there is a food crisis on the horizon. If we start hearing about it on the news, it's already too late, and the market will be already parabolic. And then it'll surge even more, and that's usually when it makes the top. We're not even in that area yet. It's so hush-hush. No one's talking about food prices, except for the food prices at the grocery store, but they're not talking about it at the commodity level. So that's part of what I'm looking for and waiting for, but there's also something technically I'm looking for to align with that. And when it happens, I'll teach it to you. I'll show it to you. That way you can see it before it unfolds, and that way you'll appreciate it more. I've only seen it in charts. I've never seen it like live. It was happening before I started as a trader, and it was in historical charts. And when we get to that bridge, when we cross it, I'll show you where I saw these things before. But they lend to huge long-term price moves, which will allow me to show you what I'm doing at that time, and therefore you'll see a real example of it. We may not ever see another example of what we're looking at here again in our lifetime. That's what I'm getting at. Like, the whole world's wrapped up in this chaos of COVID, and it's 98% getting over it. You're sick. Some people die, but people die all the time. People can walk in a grocery store and scratch their arm on the shelf, get a staph infection, and that takes them out. Nobody is given the promise that you're getting out of this world alive. Okay, I mean, we're born. It's appointed once for us to die. Okay, and how we go out, there's a myriad of ways of finding that end. This disease, if you will, they keep trying to scare you, and I don't think you need to be scared. Should you be concerned if you're older? Yeah, maybe you should, but everyone, whether you're old or young in this community, should really be taking strong consideration with preparations. And while it may be looked at as, well, you said this last year and nothing happened, I haven't stopped preparing. I've rotated out my things in my pantry and my storage, and I've started working on using them so that we don't expire, and I've given some food away, but I'm continuously trying to keep it up, because when this happens, it's going to be sudden. And the just-in-time food delivery system that we use, at least in the United States, there's only usually like a rolling 3 days stock. And if everybody gets the same idea, there is nothing in the store, and nothing's coming in behind it, because it will be weaponized. People are going to be flipping out. That's what I see coming. I see extreme hyperinflation coming. I see a lot of chaotic price moves in the marketplace. And here's the thing. The stock market doesn't need to crash in all of that. It does not need to crash. It could keep going up and not even have any problem whatsoever, because the rich are going to keep getting rich, and they're going to be in those markets doing that. Currencies, there's going to be a currency that moves better than all of them, and we'll be looking for those. It may allow us to leave euro and cable and go into another currency. I'm flexible in that regard. When that occurs and it gives me the insight that we need to be following something else, I'll do that. But right now, we're still sticking with these pairs. So I think that's enough for one weekend. I'm certainly not trying to upset anyone or scare anyone. I don't have any specific insight or inside information. Please don't email me and say, hey, look, can you give me more information? I'm nervous. Don't be nervous. There's no reason to be nervous because you can't stop it. If it happens, it happens. If it doesn't, then, you got food that you're going to eat up anyway. You don't have to go grocery shopping as much, over the coming months. But I think that you should prepare. I think we're going to have all kinds of things to be concerned about as Americans. Now, I know a lot of you aren't American in here, but I think as an American, this summer is going to be eventful. We're going to see a lot of chaos and drama. And those things are going to be used to fuel all this. But the bottom line is this. Remember what I'm telling you here. Food is going to be weaponized. You will not be able to get it. It will feel like what I'm saying right now is nonsense. But think about what I was saying in July and October of 2019 on Twitter. I said something wicked's coming. Well, I have that same inclination right now, but it's worse. And I don't see that as a stock market crash. I see it as food. Like, you need to accumulate that. And how much? I don't know. Like, I don't have an answer for that. All I know is I have 18 months worth of food and water. That's what I have. Maybe you can't afford that, and I understand and I can appreciate that. But whatever you can do, you do it. And then you just live your days as you normally would. At least you don't have to worry about that if it comes. And you're buying something that you're going to use. It's not like buying insurance that is usually a waste of money unless you get in an accident. This is insurance that you will use. It's food that you will consume, your family can consume, your neighbors, if they need something, you have a little bit extra, you can help them out. But every one of these markets, every single one of them, the way the currencies are acting, the way the commodity markets are acting, the fact that the stock markets just keep on going up, it just feels like Venezuela 2.0. It just feels like that. And I talked about that in 2016 before the elections. I said, this is what we're going to be seeing. And a lot of you are new. Like, I have a lot of you that are new students. You probably weren't around me back when I was on Twitter back in 2016, and I talked about things, and then the lead into the mentorship that you can see in September's content, or what would be considered month one content. All of that was talked about before where we're at right now. Like, we are in some science fiction level stuff here, and I think it's getting ready to get worse. So it would be in your best interest and your family's best interest to, if you're ever going to listen to me, okay, and I'm going to end it with this. If you ever are going to listen to me and take advice from me, do this. More than the trading stuff, okay? Because I know I'm going to get emails from a lot of you that don't want to hear me out on this and act on it. And when it becomes obvious that you didn't and you wish you would have, you're going to write me that email, and I don't want to read that. I just want to know that you did the best you can, and that's all you can do. That way, that's one less thing for you to worry about, and it'll be less chaotic in your own household and your own mind, and that way you can focus on the learning. Okay, because not only is it going to give me peace of mind by telling you and you doing it, but it's going to also make it easier for you to learn while you're here. Because if you're worrying about, I can't make ends meet, I don't know where I'm getting my next meal, I don't know what's going on, what's going to happen. Because all last year I got thousands of emails every single week asking what's going to happen, what's going to happen, what's going on. I don't know everything, folks. Like, I don't know everything. The things that I talk about, I feel confident in, but I don't know. And a lot of you hold me up to a unrealistic level of almost bordering on omnipotent, and that is cult-like. Like, I'm not super smart. Like, I'm not clairvoyant. I'm just telling you what I'm doing and what I'm doing for my family. And I've had peace of mind for the last year or so, knowing that my family's going to eat. And I'm going to continuously do that. I think personally that if I can give you every advantage in not panicking in situations like that, this mentorship will ground you and it'll keep you distracted from all the other things everybody else is going to be worrying about. You're focusing here. You're focusing in this. So therefore, if you're looking at this and you're focusing and studying on improving yourself, you won't get depressed. You won't get scared. You won't be unnerved, because these markets are going to be here. Everything else can be burning down, okay? But people with money, lots of it, are going to be in these markets still. And that is going to be opportunity. So that's the main thing you want to remember. And also commodity markets, they're not going away, folks, okay? Corn's not going to stop trading. Soybeans are not going to stop trading. Wheat is not going to stop trading. These markets are real. Cattle prices, they're talking about, you won't be eating meat a lot. They want to give everyone these lab created meats, and Bill Gates, unfortunately, has his hands in something like that as well. And it's just over and over and over again thing with this guy. He keeps popping up, and it's always some science fiction stuff, and everyone looks to him like he's the vaccine specialist. They're turning to him for imitation meat. We have lots of meat, but they're going to strip that ability for you to get it away. And that's also going to be seen in this chart right here. I don't think we're done going up. They're going to price meat so high that no one's going to be able to go to the grocery store and say, oh yeah, I'll buy some ground beef here, or I'll buy some steak here. And you sure as hell ain't going to go to a restaurant and be willing to pay what they're going to say their steak menu is going to cost. Anyway, that's the rant I wanted to give you. These are all things that came to mind when I was taking off last week, and I wanted to be able to hold on to it till we talked this weekend. And I covered a bunch of things here, and I gave you my mindset going forward. So I'll be looking for some of those narratives to be in operation. And should they obviously unravel, I'll be honest and tell you, I think that they've changed. They've, went into a different direction. But I don't see that happening here. The elitists, they have their agendas, and they want to try to get it fastly secured and, I guess, further along. I'm trying to think before I close it, was there any other market I wanted to talk about? And I don't think that there is here, because we went through the commodity markets. All right, so that's going to be it for this one. I will touch base with you on Monday with our daily log entry, and the next recording of me talking to you will be in the midweek review on Wednesday. Until I talk to you then, be safe.